Let's begin with what's important. 9.7% of loans by value under moratorium. This also includes the retail MFI portion. So that is the key takeaway from the Axis Bank result, that the moratorium has fallen from 26% to 9%. That's a major drop, and that's a major positive cue out of this result. I don't think any brokerage has built in such a sharp fall. That puts it in the same category as HDFC essentially, which reported 9% moratorium. Now, barring that, NII has held up pretty okay, just above the ET now estimate of 6,800 at 6,985 crore. At the profit level, there's been a slight miss at 1,112 crores versus our pool of 1,200, but then the provisions also exceeded our estimate of 4,000 crore by a couple hundred crore. So that's where that PAT loss has actually come out of. Your asset quality sequentially has improved. Gross NPAs are down, net NPAs are down as well. Slippages are moderated to 2,200 for the quarter versus 3,800 last quarter. But that being said, a full extent of provisioning and asset quality will be known to us next quarter once the moratorium is officially lifted. With that being said, the other income took a hit this quarter as well. So if you adjust for that, it really wasn't that bad a result. Other income took a hit of around 1,500 crore. So if you had that additional revenue creeping in, maybe from fee income or traditional services that are provided at branches, while branches were closed during this lockdown period, then your profitability and revenues both might have been significantly higher this time around. So some commentary that came in from the call right after the results is that it is now the second largest bank as far as IMPS and UPI transactions are concerned, and that's also nowadays a huge growth avenue for banks. So great to know that they're progressing well on that front. With the numbers that we stated to you, the NII for the year will have grown at a 20% rate. Your deposits for the year will have grown at a 19% rate. Your CASA is holding up firmly above 40%, so that's a good sign. Your average liquidity coverage ratio was 120% this quarter. So conservative approach, lots of provisioning being taken, definitely less than last quarter, 7,700. But last quarter, the COVID provision alone was 3,000 crores. So this time, you're seeing 4,000 crore plus, which is still a large number. It's similar to what HDFC took in its Q1 results. So you can't say that they aren't providing enough, and even the PCR ratio is very healthy. So as far as the poll goes, it's above on the NII, it's slightly below on the PAT. Your NIMs for this quarter came in at 3.4%, which is again a slight miss. Brokerages had built in 3.50 to 3.55, so this is definitely a miss on that, but nothing really concerning that investors are going to cry about. Everyone's going to cheer the sharp drop in moratorium and the fact that despite everything, credit growth has held up pretty okay.